A question that we often get is, would life insurance, and especially life insurance the way that you guys set it up, would it help in retirement? And the short answer is maybe, and it depends. So I give a longer, you could call it rant, a passionate explanation. And then below this video, we're going to give breakdowns and some interviews for if you're someone that resonates with something that I said and wants to learn more. We have deeper dives in all these concepts that I mentioned. So without further ado, enjoy my retirement answer. And asset in retirement, and this is a big concept, but it's very important because at the end of the day, when I talk about the two buckets that really matter, control, being able to have access to your capital, to be able to really make decisions now and in the future about what happens and how you use capital, that's really important. The other benefit is compounding. And compounding, yes, it's having your money over time growing, which is great. But at the end of the day, we care about compounding because of the result that it will have in the future. Essentially, if someone accumulates their money or compounds their money, they're saying no to today, potentially using it, and yes to the future benefit. And what does that future benefit usually realize to? It's usually cash flow. So for instance, we will put money in a 401k or an IRA or a Roth or whatever strategy, and we will delay utilizing that money for a future date that money and that activities in those strategies will help us live our life, and hopefully our money is working for us so that we don't have to work. That's retirement kind of 101. And so this is where the and asset can enhance that. So I want us to take a step back and say, what are some of the characteristics of an and asset that can enhance our cash flow? Because that is really the metric that should be measured and should matter at retirement. It's not a number. You could have $5 million, but if you can't take cash flow out of that 5 million, that 5 million is not bettering your life in retirement. So that's kind of the concept. So life insurance can enhance stocks. It can enhance your 401k. It can enhance your Roth. How? Because when you're taking money out, you want to have options. And so there's strategies like volatility buffer, which essentially means if there's volatility in the markets, do you have another asset that's not correlated or directly affected by downswings in the market? If that's the case, can you be more confident in withdrawing your money, or can you be more confident in potentially taking more risk with your money as it relates to growing or taking that out? That is an example of how an and asset, overfunded life insurance, and how that can translate into enhancing your stock portfolio. When you look at annuities and pensions, these two strategies are used quite a bit in retirement because of the cash flow, and they can be a really beneficial way to get consistent income coming in. How does the and asset affect your pensions and annuities? It unlocks other options. You now have a permanent death benefit. You might be able to take an option with more money because your permanent death benefit will cover your estate. These are, again, no investment advice is going on here. I'm just sharing different examples. You might have a paid off house. There may be strategies that you'll be able to use that house to enhance your retirement, because you have an and asset. You will be able to cover that underlying asset with the permanent death benefit. That's another example that could be very beneficial in retirement. What's the value of having an asset that is tax-free? Now, life insurance, if it's not set up and used properly, it might not be tax-free, but set up and used properly, it's a tremendous asset that is very much works like a Roth when utilized properly, meaning regardless of where taxes go in the future, threshold rates, you have money built up in an asset that you can access that money without paying any income tax, and will get transferred on to the next generation income tax free as well. And those are all benefits that under, like, just alone could be powerful. Like if you just take one of those strategies, like life insurance in your house, or life insurance and selling your business, or life insurance and your stocks and on 401ks, or life insurance unlocking the ability to get more money out of your annuity. And the point of this video, and the point of me putting a bunch of videos down below, is I want you to understand the power of this, because whether you're just getting started, whether you're nearing retirement, I want us to understand that the and asset has a lot of benefits to it. And this is really important because we can talk about the power of compounding, and you can look at the metric and you can say, oh, it compounds 3% or it compounds 4%. And you could say, I understand the tax benefits and all this stuff. But at the end of the day, as I'm learning about the power of the and asset retirement, I go, there's so much here. And I feel like we need to do a better job of communicating just the benefit of alone of having life insurance, overfunded life insurance with other assets, and how that can be super beneficial regardless of what happens, volatility, taxes, uncertainty. There's a lot of benefits of having this at the foundation, whether it's the majority or a part of your financial plan. I think there's a lot of benefits as it relates to retirement.